All right, guys, it's Paul Singh, the Market Speculator, with the trade report for Monday, December 31st, 2018. Remember, tomorrow's only a half day. Tuesday is the first day of the year, New Year, and we'll have a day off from the market, and we'll start back up again on Wednesday for the first trading day of the year. Let's take a look here at SPY. First of all, before I get to that, uh, I'm recording this close to 11 o'clock Pacific time at night, and SPY is up about 0.75%. Crude's up pretty big. NASDAQ almost 1%. So looks like, and we're still about a few hours away here, but looks like we might open green, and we'll see if that holds. It's going to be important, even though it's only a half day, and you know what, we don't place a lot of stock in these half days and holiday type days. This one's a little bit important because the market is at an inflection point right now for us. So remember, we've talked about on all of these bounces here, we want to see if they can clear resistance levels and if market breadth can improve. We've had no indication of market breadth at this point, but we have a key resistance level, and that is the 9 EMA. And look, that's exactly where we stalled on Friday, like clockwork. We tried to break through that level. So if anyone tells you these levels are not important, we can see right here how important they are. And through a lot of these areas, the breakouts and breakdowns came around this. Stays below the 9, we continue downwards and continue downtrend. So now we want to see here, does this level hold? And we're going to open above that level if we open where we are right now as I'm recording this. So the key in on the last day of the year is basically, do we get that hold of the 9 or do we not? We're trading very cautiously. We just took a little shot with SPXL to see if the market does actually bounce. We're not really making a prediction, but if it does bounce, we could get a big win. And if it doesn't, we take a small loss and we reverse it and go short. Because if we do get stopped out, that means that the market is going to close below the 9, which it actually did on Friday, but we want to see, does it really continue downwards? If it starts to continue downwards, we'll reverse that long play, because at that point, we're basically getting our continuation short, just like we did here and just like we did here. And these were our big short wins in December. So I think either way, we can get some big wins. If the market continues to bounce, I would expect we at least reach these moving averages here before testing and seeing if we fail or not. And if the market starts to slide here, we could get the next big continuation, which could go all the way down to here, which is really the next strong support level right around 228 to 230. And we're at 247 here. So if we flip it now and look at the SPXL position, you can see here much of the same, basically testing the 9. And, hopefully here, we've got our stop around 30, and I may even raise that. We're going to keep it at 30 now, but maybe if we close here at around 30.50, that means we're starting to fail at the 9, and I want to reverse. Now on Friday, I talked about taking pair trades, which would be keeping the SPXL on, but then shorting something like IWM, which we expect to fall harder. And I still may do that, but I'll likely get out of SPXL and short IWM if that happens. So basically, after all this talk, the key is, do we hold the 9 here and not only hold, but do we continue higher, or do we fail at this level and establish shorts? And we don't have any prediction. We don't know what's going to happen. We're going to follow price action and see where we go from there. So the Qs, basically the same thing, a little bit stronger, surprisingly, because it was so much weaker before. But tech is actually starting to pick up a little bit, and then other areas that are strong. Brazil continues to show relative strength, and we may look to take a position there at some point, in India as well. So basically the BRIC countries, and my two favorites, Brazil and India, both looking pretty strong. Oil is bouncing strong pre-market or after hours here. We'll wait and see if oil gets above its 9, that's I'm not gonna look to short it. It's so beaten down here. But if we get that close, we'll say above 10. If oil gets above 10, I'll take a feeler position because the risk reward is just so good here. If we get stopped out, it's going to be a really small loss. Essentially, if we're getting in at 10, let me switch over to our trading vehicle, which would be the the leveraged UWT. Let's say we entered this around 950. We're basically going to risk about a point and a half for the potential of maybe even 10 points. Maybe at least, even if it's up 5 points, we're getting 5 to 1 on this. So even only 3 points would give us obviously 3 to 1. So it's going to be a really a good risk reward on that, even if we think we're only going to win 40% of the time on it. So we're watching oil. We really want to see a bounce there. LABU as well, biotech, kind of that same concept where there's a lot of room to the upside. You can see how much room. I mean, this thing could go up to 60, and it's still really beaten down. So if we enter at say 31, and it only goes up to only goes up to 40, and we're using a 2-point stop, we're looking at 4 to 1, 5 to 1, which is fantastic for our reward to risk. So these aren't high probability plays, but the risk is so good that we can take these small shots because we know if we win really big. If we don't win, obviously we just take a little small loss. Some other areas of relative strength: Tesla looking very strong. Software area, we've been talking about this one for a while, still showing a lot of relative strength to the market. And some of the stocks we like here. Team, you would never even know the market has been cratering here. This thing is so strong. It's already almost back up to all-time highs. So Team is one. If we deem that we expect more of a bounce, we could enter Team. MDB, same thing. Cyber also. So all of these software stocks, very strong. And then of the FANG stocks, Netflix is the one I like the most. Partly because it's got the best volume pattern here. It had strong earnings, so it's not a broken stock like, say, Facebook, which is actually a broken stock, regardless of the market. But Netflix is not a broken stock; it's just getting crushed by the market itself. So we like Netflix, and then metals are really beaten down. It's kind of like the oil trade, where it could improve, and if it does bounce, we should see a really strong bounce and a low risk play there. So probably not doing anything tomorrow, but if we decide to take a position, it'll probably be from one of these low risk, high reward type areas. And then, we'll enjoy our New Year holiday, and then we'll get to work to start the year, to start looking for some more aggressive trades if the market allows it.